Well, good morning, everybody. Like John mentioned, I'm Anna Bucher, and my co-host today is Laura Evans. Between the two of us, we actually calculated we have 52 years of mortgage experience, but we are both mortgage originators with Orstown Bank. On the screen, you'll see our contact information, so feel free to jot that down. There'll be another slide later on in the presentation with that as well, but if you have any questions on anything or want to reach out, that's how you can get a hold of us. So today, we're really just going through being a first-time home buyer, the mortgage process, things to help everyone out. Just a little summary. So Orstown Bank is a local community bank that has been open since 1919. We are committed to helping families and first-time homebuyers reach their homeownership goals. We offer a large variety of mortgage programs, and we have personalized guidance through every step of the way. So if you've been in the housing market recently or have tried looking at things, you probably know it's a little tough. Inventory's low, prices are pretty high, and interest rates have just been moving constantly. But hopefully what you get from today is just more knowledge on things and learn more about the pre-qualification process, because those are all things that can really help in this tough market. So the main thing we're going to dive into is going over the pre-qualification. It's really important to have this first step. A lot of times you actually need the pre-qualification before you can even go look at a house, but I think that's a good idea anyway, because you know exactly what price point you can afford as far as monthly payment and also what you need to bring to closing. But one of the main things when you start with the pre-qualification, along with the application, we are going to request some documents from you. And you may not need to provide all of this, but some of the documents we might request are your ID, pay stubs, W-2s, tax returns, bank statements. We, of course, need employer information and sometimes rental history. And with that information, what we look at with the pre-qualification are these bullet points on the screen. So we go through credit, so we will do a credit check. We look at your employment and employment history, your income, your debt, what assets you have, and the stability of all of that. So with employment and income, for most loan programs, you're going to need a 2-year employment history. And if you've just graduated college, sometimes your schooling actually counts towards that 2-year employment history. We take a look if your salary, if you're paid hourly, if your income varies, we will need to do an average on that. And if you're self-employed, the income looks a little different. You do definitely need to have a 2-year history for that. And we'll want to see 2 years of tax returns and how that history looks. On our website, to take a look at what a mortgage payment will work out to be. Now, when you're doing the pre-qualification, we will also calculate this for you, but if you're in the beginning stages, this calculator on our website is really helpful. Sometimes the online calculators, when you're looking at a home, they might be a little bit off because they might not include everything, but typically with a standard mortgage, your total payment is going to include not just the principal and interest payment, but also property taxes, homeowners insurance, and monthly mortgage insurance, PMI. So this calculator on our website is really helpful for that. And then with that payment from the calculator, or when we're doing your pre-qualification, we are going to be looking at your debt to income ratio. So this is really how we nail down what dollar amount we can go up to with a mortgage when you're being pre-qualified. You might actually, we might tell you we can go to a higher number, and you might want to stick to a payment that's comfortable for you, but we'll be able to let you know your maximum number you can go up to. So your debt to income, how we calculate that is we include your current monthly debts. So that would be if you have an auto loan, credit cards, installment loans, student loans. We'll take those monthly payments plus a proposed monthly payment for a new mortgage, and we'll divide that by your gross monthly income to get this percentage. And then for most loan programs, that percentage can't exceed 43 to 50%. Then we do also dive into your assets and what you have to be able to go towards the new purchase, because you're going to need to come up with down payment and closing costs. So we'll dive into those assets as part of your pre-qualification. And I'm going to hand it over to Laura to talk about credit.
Hi, everybody. So we're going to talk a little bit about the credit and what that means. I assume most of you are first-time homebuyers, so it is important for you to know your credit and what your credit score might look like. A trade line is something that gets reported to the credit bureau. So it would be anything like a credit card, student loans get reported, auto loans get reported. Any installment type of loans will get reported to the trade line. And obviously, if you pay your bills on time, it is going to support a good, solid credit score for you. If in fact you have limited credit, that doesn't mean that you can't qualify. It just means that you have limited credit. But if you pay that bill on time, it will produce a score. So don't worry about how much credit you have. Inquiries also, that is really who has pulled your credit in the last few months. So you want to kind of limit that and not have your credit pulled often, because it will drive down your credit score. And then there are opportunities that we do have programs for people that don't have any credit, but have alternative credit, like your rent, like your, it's just things that you pay on a monthly basis, cell phone bills, electricity bill, gas bill, things of that sort, that we can possibly develop a credit for you. But that's understanding a little bit about your credit. And then once we pull your credit, we will see what actually your score is, and that will be helpful to us. As far as down payment, we've got a variety of different type of programs that are going to decide on what kind of a down payment do you need. For example, for the first-time home buyers, we do have a actual first-time home buyer program that is 3% down, but that 3% down can come from a variety of sources. Obviously, your savings, a gift from a family member can be a part of it, grants, which we're going to talk about a little bit more about our grant program. There are some county and city down payment assistance programs that if you qualify, we can use that as a source of down payment or closing costs. The seller can assist in helping you out with your closing costs. And if you have a retirement account, 401k, you can borrow from that as well to help with your down payment. As far as the first front door, this is a sheet that we're looking at right now, the first front door program. This is the grant program that is actually available right now. Money does go quickly. If you do qualify, you will obtain $15,000 from this grant to use towards your down payment and closing costs. As long as you have $1,500 of your own funds, you obviously we can use the full $15,000. So there's some qualifications for that. And you have to obviously be a first-time home buyer, meaning you haven't owned a home for the last 3 years. If you're purchasing jointly, you have to be eligible jointly. If you have, well, the property has to be eligible, meaning you have to be eligible as income to qualify. So there is a median income that will have to allow you to qualify for this grant program. We can determine that by you sending pay stubs and a W-2, and then we can determine if you are going to qualify for the grant. And we will obviously work on applying for the grant for you. And then, of course, the homeownership counseling. Everybody that's a first-time home buyer will take a counseling course, which is an online course for you. If in fact you have any questions, please open up the chat box and list your questions there, and we can answer them at the end of the seminar here. Programs for first-time home buyers. This is what we're going to break down here. So there are two main programs that we offer is our first-time home buyer program, 3% down, no PMI. PMI is something that any new homeowner or anybody that's borrowing money would be required to have on their loan if they do not put at least 20% down. So our program does not require PMI. And then we have, excuse me, the CRA program, which is our community investment product. And that's based on you purchasing within our footprint, and it's within the community investment area, which we can obviously determine that as well. That also does not have any PMI. There's also conventional loans. If you don't qualify for a first-time home buyer or the CRA product, we can obviously do a conventional 3% down program for you. USDA is also a good one, which is 100% financing if in fact the house fits within the USDA guidelines, which is rural housing. And if you're a veteran, we have VA loans and an FHA loan. If in fact any of the other products do not work, we can also talk about the FHA product for you too, and that's a 3.5% down program. Here's the two flyers on both of those products, the first-time homebuyer flyer and the community investment flyer. Gives you the highlights. First-time homebuyer, for the first-time homebuyer product, up to $3,000 down payment assistance. That's a grant by Orrstown Bank. If in fact you do not get the $15,000 grant, you will still be able to get a grant for $3,000 from us. It is a fixed interest rate. No mortgage, no PMI, mortgage insurance. The rates are extremely low on this product. 5.625 is our first-time homebuyer product. And income limits, obviously we talked about you have to be within the median income, 80% of the median income for the given area that you are looking to purchase. Again, 3% down, as little as 3% down, gifts are accepted. And seller contribution can be up to 6% towards your closing costs. And your credit score has to be at 680 or higher to qualify for that product. And you're going to obviously take the education course while you're in process with the loan. And the community investment is for purchase or cash out or refinance. So you don't ultimately have to be a first-time home buyer. You can be a repeat buyer. Income limits do apply as well. So it is the median income qualification. That product, minimum FICO score is 660. No PMI on this product. 6% seller assistance is available to for the seller to pay 6%, up to 6% of your closing costs. Maximum financing is 97%, so it is 3% down. And that program is limited to the CRA assessment area of Orrstown Bank. So it's really our footprint in a way. So the mortgage process is simply to qualify. So you're going to want to apply with one of us, myself or Anna, and we can take your information. We're going to qualify you with how much you can afford based on what we see, and that would be your credit and your income. And then your mortgage payment is your principal and interest, property taxes on the home of interest, homeowners insurance, PMI if applicable. If you get approved with one of the programs that don't have PMI, you're not going to have it. And then obviously the first payment due date is really when you close, and then the following month you don't have a payment, and then the month after that you would. So let's say you closed in April this month. Your May, you would not have a May mortgage payment, and then your first payment would begin June 1st. So who is your team when you purchase a home? So obviously you're going to have a lot of people that are going to be helping and supporting you. That it would be your mortgage partner, a mortgage originator like myself or Anna, your realtor, and there's going to be a loan processor that's going to be internal, like Orrstown Bank processor, that will be helping with getting your paperwork and getting everything to underwriting and get a smooth transition throughout. The underwriter, obviously, internally is going to be reviewing and approving your loan. The appraiser gets involved. They're going to appraise the property that you're interested in purchasing to make sure the value is there. If you ask for property inspections, then you will you can order a inspection on your property to have that inspected, and the inspector will give you all the details of that property. Title company gets involved on clearing title, making sure you're purchasing a house with no liens or judgments, etc. And the closer, which is typically part of the title company, there's going to be a closer from the title company that we are all going to meet at the table. That would be me or your loan originator, be your realtor, and the title company will all be at the closing table for you. You're going to get insurance as well. That's your homeowner's insurance policy. So you will get that policy, and we'll put it all together for you. So we are your team, and we're going to help you get your dream home. Okay. What you want to do and what you don't want to do, when you buy a home. So what you do want to do is pay your bills on time, so you have the strongest credit. Have all your documents ready. Anna spoke to you earlier about the documents that we may need, as far as income, your W-2s, your tax returns, your pay stubs, and your assets. And then you want to have employment that is stable and consistent. So we're looking for at least a 2-year employment history. If you're not at the same job for 2 years, we would take your prior job employment as well. If you were just graduating from college, you have your dream job, then obviously we're going to take your college information as your prior employment in a way, so you were a student. What you don't want to do is make any major purchases. Don't go out and buy a brand new vehicle or do anything that's going to cause you not to qualify for as much of a home. Don't apply for any new credit cards. because it does show as an inquiry. Then we're going to have to look at what your new credit card balance is and what that payment is per month. And don't be transferring money between accounts until necessary. So if in fact you do have a 401k and you are moving, you are going to be taking money out of the 401k. Do that once we have you approved, you find a house, you now have purchased it you are under an agreement to purchase it. Then we will talk about how we're going to be transferring monies from one account to the other. So the ways to apply. So you're going to obviously call us. Our numbers are here, and they're also on the flyers. And you could also apply online. The websites are there, so you could do your application online, submit it. We will then get it, and then we will contact you so that we can go over the application. So 2 ways: call us, apply online. Just make sure you have the following information so that when we ask you, you know what you need to give us. 2 years of housing history, your social security number, your employer information, who you're employed with, your income. How do you earn your income? Is it hourly? Is it salary? So we'll talk about that as well. Or are you self-employed, which that obviously is a little different because then you would need tax returns. And then banking information, you would need to know what's in your bank accounts, whether it's checking, savings, CDs, retirement. And you obviously met us both, Anna and myself. We are looking forward to helping you with your home ownership.